Welcome everyone to market analysis here on a very important day. It is currently what is it? It's November 3rd, Sunday, 2024, and we are coming into a very important week and a very important period in the US stock markets. So it might be a little longer of a video here today where we're going to be breaking down everything to help prepare for the week that's coming up. And specifically, right, a huge topic of conversation, the presidential election over in the US. Now, I do want to preface, naturally, I am not an American. So I know it's a big topic for you guys, but I don't want anyone to come at me with their nonsense or get offended by anything that I say. And obviously, I'm not going to be saying anything crazy, but I'm just going to be putting out right the facts and some of my opinions based on this in relation to the stock market. Nothing more, nothing less, just in relation to the expectation of the market, because realistically, the market affects us all. The US market, specifically the US economy being the largest economy in the world, right? A big leader. It is something that everyone that's involved in financial decisions has to take a look at and see what the expectations and expected moves are from either candidate, right, coming in. So what I want to preface with, we'll take a look at some of the news, specifically a lot of the news that surrounds the election, right? Talking about what stocks may perform well, what my expectations for the market is under each candidate in the short to medium term, as well as obviously weekly trades based on the future specifically, and taking a look at some of the past elections and how those have gone, because my plans are to trade the election in our Discord on Tuesday night at TradePro Academy. So it's important to take a look at what was done in the past and how to kind of go about these things, and where this market is headed right now. I am short term a little more bearish, right? I thought that we could potentially bottom out last week after such excessive drops, but now that I'm doing more analysis and trying to break this down a little more, I see that there's probably going to be a little more downside coming into this market, as we lead into some potential upside to close out the week. Now, some of the main topics of conversation last week were big tech earnings, right? I think 5 out of the 7 Mag 7s reported. If we exclude Tesla, that reported the week prior, and then NVIDIA, that reports November 20th. Right down here in the bottom half of the screen, you can see this like blue and pink, purple, I don't know, whatever kind of line. This is a market cap weighted index based on just the Mag 7. So you can see that last week or the past few weeks, we were kind of creeping up into this like range into the general Mag 7 index before last week we saw a pretty stern drop off after some of these guys started reporting earnings. So in front of you, we have Apple here. Apple even at the beginning of last week started to roll over, and then earnings weren't super attractive, right? Some might say they weren't like crazy bad, but realistically, it seemed that we had a pretty strong downside effect in a lot of the earnings if we exclude like Amazon and Google. But overall, tech has been dragging lower, right? Tech has been dragging lower over the past week, where a lot of people are looking at this, investors and traders alike. And with this weakness in tech, it seems that the speculations were that markets are trying to price in a Kamala win, right, based on some of this action. Now, you take a look at some of these big tech names, right? Amazon had a pretty solid earnings pop gap. It pulled down a little. Microsoft did very poorly here. I think Microsoft is trying to kind of bottom out, where we're coming into extremely oversold territory. NVIDIA obviously didn't really remain too changed. AMD was one of the factors that reported earnings. You can see a pretty big decline here in AMD that helped pull NVIDIA lower. Meta, it's the wrong one. Meta here, it did pull down a little on those earnings, but like Meta is trading at like all-time highs isn't that big of a concern realistically. What else did we have? We also had like Tesla last week that did pretty well. But did I miss? Oh yeah, Google. Right, Google had pretty good earnings, but pulled down pretty aggressively. Google, like Microsoft, is one of these like Mag 7 names that doesn't, it's not holding very well realistically. And I think that a lot of this is just like waiting for the selection to kind of pull over and get some of that continued downside before we start that stronger rally. Now, I think that is a pretty decent reality here where tech has been extremely underweight for a very long time here. And I think it's just a matter of getting a lot of this uncertainty out of the way before money starts piling in. This is what I was saying last week to the team, that I'm looking at this tech weakness here in the perspective that we have a lot of news that's coming out. And I think that regardless if earnings are good or bad, tech is going to get bought up into the end of the year after we get through this period of uncertainty, right? That might present a little more downside. That becomes an attractive notion for a lot of investors, especially if tech starts pulling down with kind of like semi-okay valuations realistically. I think for the foreseeable, very short-term future, they're into going into next year, there's still a little more upside, there's still a little more expansion, and tech is the main sector that's been lagging pretty aggressively. So as we take a look at this, right, I want to just like start diving into what we have with the news for the potential election. We'll talk about Jerome Powell and the Fed as well. But I've pulled up here, right? This is the last, not the last time, but 2016, right? We'll look at 2016 and 2020. This is the prior, right, election. This is when this is 2016 November 9th, right? So you can see that the high of the move here on the S&P was 25.29, right? And the low band was 23.91. So a very, very significant move, about 140 points of movement throughout that session over there, just on the S&P 500 futures, which represents a lot of the value in itself. Now, if we take a look at what happened in 2020 here, 2020, when was it? We'll probably see it somewhere. I'd assume it's this large wick over here, right? Again, very similar construct where the low of it was 38.87 and the high was 40.40 pretty much, right? So pretty substantial larger move from there as well. So it's, you can see it's like a very extended wick, a very large wick. NASDAQ looks very similar. So it's going to be something of the sort as well on the overnight session here going into the election period this year, meaning that trading it live, right, there's going to be a lot of opportunity. But I think that people overestimate the fact of the volatility and the movement that happens that could be very, very excruciatingly painful, especially if you're on the wrong side. So you have to keep in mind that these things aren't necessarily like, it's very hard to assimilate the information real time and anticipate what the market's going to do. You just kind of have to react as the market's reacting, which in my perspective, it works a lot better when you're just like looking at like general auctions and areas and distributions and like the order flow of things, instead of trying to anticipate, okay, like XYZ went well, a market has to go up or market has to go down. It's very similar to like a Fed event, where the Fed event overall, you have like a pretty strong directional move and eventually they start like fading away from it. So the first move, like if you're not in the first move, it can run for a very long explicit period of time, but there's generally going to be some kind of profit taking or some kind of repositioning that turns the thing over. So if you're looking at it and it starts rallying like immediately, let's say like, I don't know, they start like announcing whatever and it starts like rallying pretty aggressively immediately, like if you're not on like those first moves, you kind of want to wait out and see if this thing wants to turn over by the end of that period. Now, as I'm looking at this, right, I think that based on what's going on with these markets, there is the potential to see a little more downside, especially with the failures from last week. I think that this buying is extremely overdone in a shorter term aspect. I think that prices just want to fish out some better buyers at lower prices. And we'll discuss that a little more in higher detail when it comes to the Nasdaq and the S&P, and we'll take a look at these volume profiles in terms of where I would anticipate the buy side and the sell side trying to come in. But I think that based on what's going on, especially with the increased uncertainty and the increase in volatility as well, with like the VIX trying to increase, we're most likely going to get a little more downside momentum before the buyers try to step in. And I'll talk about exactly where I think that those buyers have the best chance to accumulate larger positions to try and hold this thing out realistically, but it's not necessarily super soon, right? Which means that it could be like a week or two of maybe some weakness, and then we start to find some buying, because I'm still a believer in the end of year rally that's expected to come out, especially if tech gets its just desserts in terms of buy side that comes in. Now, Let's take a look at a little more about this election and talk about what's going on in terms of um, the anticipated outcome with whoever right comes into play here. Now, I think that big tech can do well realistically under both candidates here, right? Regardless of who wins, I think that big tech can benefit a bit from either or. I think that generally a Trump win would probably be the best for tech, right? But I don't think that there is a complete disencouragement with a Harris win for tech, right? I think that tech initially can see some downside with a Harris win because of the proposed increased corporate taxes, right? I think that's a huge aspect of it. But on the other side of things, right, the what's it called? The interest from the Harris side in involving right cybersecurity, G5 infrastructure, data privacy can help some of the big tech companies, right? Telecommunications, specifically things like Apple, or sorry, things like Alphabet and Microsoft, in terms of expanding digital infrastructure. But I think generally speaking, big tech would do better initially and overall under Trump, which we've seen over the past week, right? Especially with the pull down in big tech, the pull down in these markets, especially around the earnings, that it seemed like from a logical perspective, it seemed like investors were trying to price in more of a Kamala win based on that. So obviously the stock market is forward looking, so we don't know, well, I don't know at least what's going to happen, but it is an interesting factor. Now, some of the other things, like let's talk about the Trump trade first. We have like big banks and generally financials are most likely going to do fairly well under a Trump win. And so is crypto, right? Very big advocacy on crypto over the last few months from that regard. And I think that energy, like things like oil specifically, are going to do well, right? Just basic energy names. You got like ExxonMobil, Chevron, and so on. You also have, what was it? You also have defense stocks that could do well, right? Advocate of increased military spending, and then naturally you have things like I think small caps as well, because um, a lot of business incentives are going to flow through. So Russell 2000 has a good chance of doing pretty well here, as if we get that Trump win. You also have things like Trump Media, which obviously is going to do fairly well behind that, but other than that, right, I think it's going to be very, I think like high beta companies slash growth focused in terms of the expansion to the upside is should we get a Trump win. On the other hand, if we're looking at the Harris basket and what's kind of leading the charge over there, like I said, there is the potential for some of the tech names that could do well under Harris, but we also have, what's it called? We have, what do we have? We've got green energy, healthcare, right, that come out on the Harris side. Things like Eli Lilly, Merck, Pfizer, right, United Health Group. Um, we could see that there could be a little more downside, like I was mentioning before, in big tech to begin with, but ultimately I think it'll be fine. And then green energy, like I was saying. So those are like the main things to kind of consider going into this, right, stock wise. The overall thing to consider, in my opinion, is going to be the like medium term effect in terms of what the expected move is going to be from both candidates. Now, in my opinion, I think that with big tech kind of keeling over a little, I don't think, especially with like the corporate taxes and whatnot, if we get a Harris win, I think that the market does get a little angry for the short term, right? I think that a Harris win results in some kind of deeper market pullback. That, listen, this is the thing. I don't think it lasts very long. I don't think that it's going to be something massive, right? I think that immediately is going to be something of like maybe 5 to like 10% to the downside, which turns down like quickly, which, yeah, okay, that's a fairly big number. Turns down quickly, then gets rebid pretty aggressively. I think that it results in a decent buy side momentum after this happens, which could present a decent buying opportunity. But like down the road, regardless of who wins, Trump or Harris, I think that the overall market is still a bit clumsy and in danger going into potentially like the middle of 2025, let's say the end of 2025. So I think that that's a huge factor that a lot of people are overlooking and need to consider. But I think that immediately the result, if we split it up, right, I think that Harris is involved in some kind of larger downside momentum move that happens in the markets, which is kind of starting right now before we get a pretty very aggressive rally to the upside. If you look at Trump, I think that Trump's presidency would cause kind of just like a flat line and then like a gradual climb. I don't think it's going to be I don't think a massive downside gets involved in that. I think that overall the response is like big tech starts to get picked up a little more aggressively, and then you have that gradual rally higher. Now, they both are most likely going to result in the same thing at different times. So that's the thing. Now, a lot of this is based on how the last few days of the market shaped up along with big tech, right? The failure to see big money flowing into big tech, the failure to see strong anticipated buying in big tech as we have rallied in big tech, like a lot of these big tech names present the opportunity and the, I guess, like the vision or like the look of wanting to rally, but there's like zero fall through and the buying dies out, right? Specifically, if you're looking at like NASDAQ, like you look at the big seven tech companies, especially on NASDAQ, like buying happens at lower, deeper prices, and the pullbacks get more and more aggressive, and the selling gets more and more aggressive as prices dump down. So it's a big factor that, yeah, okay, they are still liking tech, but it seems like they like tech at lower prices, which could be a huge constituent in trying to pull this thing lower into the coming days, weeks. So I think that to begin the week, this week in these markets, I wouldn't be surprised to see some kind of more extended downside. Nothing crazy, right? I don't think it's going to be anything insane, but realistically, if I had to pinpoint some stuff, looking at this, oops, let me find where that is. Looking at this realistically, like on the spy, I'm kind of targeting somewhere this area. This has been an area of target for me for quite some time to find some of that buy side momentum. We'll talk about what that looks like on the futures, especially bringing in the volume profiles on the futures. But for the S&P 500, right, I'll be looking at somewhere around like 560 to like 564, let's say, in terms of that pull down to find better buying to see if we can actually pull this thing higher. Now, that doesn't result in like a very massive downside move, right? It's only going to be about like 4% from those highs, but it is something to consider and something to look for. Now, I think like worst case scenario for the sell side, if it comes through, if we get like a little more of an erratic pullback, which is totally possible, I think that we start moving back towards that 550 area on the SPY by the end of November, and then we start seeing some of that buy side. So regardless of where we stall out, right, I'm going to be there, but right now I think that the downside is the right side before we get a stronger rally that closes into the end of the year, where we actually break above these highs. Because one of the big things that you have to understand and notice is that, okay, you come into a new all-time high and what happens, right? Volume just dies off. Volume gets absolutely obliterated. I'll show you guys when we look at the futures, but like volume on up days on the futures compared to like volume over here on any given average day is much, much lower. It's too there's not enough buying, right? It's too overbought at that point. It's too overdone, and no one wants to continue this buy momentum, which means that these sellers can easily take advantage of what's going on. They can take profit, they can pull prices lower in anticipation that we get better buying that comes in from lower prices. So this is Sierra. Let's find our other chart here. One of these had to have multiple tabs. Okay, there we go. So if we take a look at like, well, obviously we can, what is this? If we take a look at what's going on from a perspective and like in terms of all of these different equities, right? Especially the breadth, it'll give us a little more indication of what's happening right now. But I do want to I want to take a look at one big thing here, which is kind of surprising to me, is the volatility, right? VIX, a volatility gauge over here, and you can see that we have been holding and sustaining up in the VIX in the volatility above that 20 marker for, right? It seems like very well, okay, above the 20 marker. We haven't stayed above that for a very long time, but we stayed above that like 18, we stayed above that 19 for a very long time, right? Very low volatility when we were trading on the upside swing in a very slow moving market throughout the majority of the year. On average was about like 13, right? 14, let's call it 13, 14, somewhere there. Right now, you can see we didn't even peak under 18 as the market was sitting at an all-time high. So volatility, like relatively kind of peaked meaning that like obviously options are going to be more expensive in this regard. When you have volatility like this, when you have VIX like this, you expect to have more movement in the market overall. But when you're trading at all-time highs, it's kind of rare for the VIX to be sitting at like a 20 marker. Right now, obviously, there's no technical analysis to be done on this. That's ridiculous. But from a volatility perspective, it seems that like the uncertainty has been gradually increasing. Of course, I understand you're going into an election period with the big tech earnings coming out the week before, with Jerome Powell and the Fed speaking the week of the election, but it seems a very overdone to an extent. It seems that volatility has sustained a little higher than it should have, in some respect. So if we take a look at, for example, the SPY and we compare it to volatility in a sense, we compare it to short volatility, right? We look at SVIX because typically these things would move together. Now, I've made a complete mess of this chart, so let's see if we can find a different assay. You know what? Let me use a different chart because this is obviously not going to work. Boom. All right, let's see if this will work. There's less garbage on it. So, like, okay, let me see here. How do I make it? Nope. I did something wrong, people. Whatever. Okay, let's just leave it like this. There we go. Okay, that's a bit better. So, okay, let's take a look at this. The pink line over here is going to be um, your short volatility, right? Generally, short volatility does track with the upside in the market, right? Or I guess it has generally somewhere we can say like a 1-to-1 correlation, right? Is generally correlated. Again, generally. So you don't blow this out of proportion, but you've seen that we've seen a pretty stern rise over an extended period of time with both short volatility and the S&P. Now, there's a certain point over here that differentiates things. On August 5th, right, something happened pretty drastically where we saw the VIX flush up to like 65. The markets didn't have that drastic, in my opinion, that drastic of a move. It didn't even look like things were that oversold before we started rallying, but you can see that volatility has not been the same since. And you can see that ever since, short volatility has actually been on the decline while the market has been on the incline, right? The equity market, right, the risk on factor has been increasing while short volatility has been dropping. So again, you combine those with like relatively elevated VIX, it seems like the uncertainty and like fears of something are looming over. Now, if I combine this with another factor, all of this, right, is telling me that it's a little scary. It's a little scary sitting up here into these all-time highs with volatility being absolute garbage every time a buyer tries to step in into these rotations, along with volatility not really telling us that the upside is that strong. If we combine also breadth to mix all these things up, it seems like we're in a position to find a deeper pullback realistically. So breadth is another thing that we look at a lot, and the breadth on multiple different lengths of averages here, you can see that the overall encompassing breadth has been dropping off over the last week. Obviously, we've had red days, but we haven't really seen overbought, right? Extremely overbought breadth that comes into this like little red box that we've put on in a pretty long time. And even only the short end of breadth has actually been overbought in a pretty long time, right? Towards the end of August. So we haven't seen that extremely overbought while we're trading at all-time highs. Then we start keeling over like this. Breadth is like slowly grinding up, but it's kind of pinned right now, which I do not like at all. The fact that we saw a pretty stern decline in breadth, especially the shorter end, with even some like medium length, like you have above the 50-day average here at that 50 marker, is telling us that damn, this thing it's looking a little uncertain. So I am in the short term a little more bearish, and this bearishness maybe it lasts like 1-2 weeks. We'll see how kind of deep we go. But for me, honestly, the best case scenario is that everything lines up and we get a pull down into extremely oversold breadth, which hasn't happened in a very, very long time, right? The short end of the breadth was oversold this year in April. The last time before that was last year about this time, right? The beginning of November, which made for a fantastic long. But you can see even here, we got overbought. We got extremely overbought. These kind of extremes have not happened in a while, while the market continues to rip into all-time highs is, for me, a concerning factor. But, right, I think that it also presents the opportunity, if we get extremely oversold, to continue that momentum to the upside swing, because I think all of this is more of a short-term perspective of weakness in these markets. It's the same thing. This one's based on the Nasdaq, so this one's the S&P, and then this one's going to be the Nasdaq down here. Nasdaq breadth, obviously, like big tech has been struggling a lot in comparison to the S&P over the past like few months. And yeah, like we're not getting anywhere really overbought in this, but in terms of being oversold, it is holding honestly deeper than some of the prior pullbacks that we've seen. So again, a concerning factor here with breadth, the way that volatility is shaping up. And a lot of these things are leading me to believe that we probably haven't seen a bottom just yet in these markets. And I will be looking out for that. And I do have some areas in mind. We'll take a look at what they look like on the futures. But for me, I'll still be looking at some areas to try to swing some longs, but I'm not necessarily expecting some kind of monster crazy rallies on them. So if we look at where was it? Here we go. So let's just get rid of some of this. So we take a look at the other equities here, and we kind of group them side by side, because I like to draw comparisons of what's going on, right? Triple Qs, IWM, the small caps, and then we have DIA, Dow Jones. The value names, like I've explained numerous times before, the value names generally tend to lead the pack in a kind of I guess like parent formation, if you will. What we're seeing right now, we had drawn this box several weeks ago on the SPY, where I have the expected kind of rotationary area to kind of hold out for some kind of potential downside move. My peak was about like 585. Yeah, I think we did break above that. And then the bottom band is somewhere at 570. It's fairly wide, but I was just expecting to see like prices start failing and rotating from there to pull down and catch better buyers from that region before we do eventually spike up into the end of the year. So far, we are holding that area, and the volume as we are moving into all-time highs was absolutely atrocious. So like one of the factors that I'm looking at realistically is going to be here and then over here. This blockade of volume from the last rebid that we got, I might not necessarily see it, but around 550 is going to be my major turning point to find those like stronger buyers to come in. I'm also going to be looking around that 560. I think that's going to be a major point as well. Now, this is what I'm talking about. So comparing the SPY and the triple Qs here, right? The tech heavier versus, obviously SPY still has a shitload of tech, but the tech heavier, I guess, triple Qs, we had this like very big struggle period here where it was just like rotating like slowly to the upside, slowly to the upside. Volume is pretty trash. Then like, okay, you get these like massive pull downs as you're just fractions away from a new all-time high. S&P at all-time highs, triple Qs not at all-time highs. So this is still dragging on big tech, right? It's still dragging on it. Not being able to catch a stronger bid is pulling away from the factor that big tech can and will lead the market to a very aggressive all-time high, but these guys need to catch up on this. Now, the interesting factor is that it seems that the SPY, although I highly doubt it, it seems like the SPY is actually weaker, right? From the peak to the bottom, we're down about 3%, obviously not in terms of the current close. But over here from the peak to about the bottom, we're down like 3.5. So naturally, big tech is higher beta, so you'd expect to see a larger decline in terms of what's going on. But it seems like the respect in big tech is holding out a lot better. Yes, the volatility is more, but it seems like they're not necessarily dropping as aggressively. You have this distribution block over here, but again, in my opinion, I think that we're most likely headed down towards this like 470 area. Again, an area that I've been looking forward to for quite some time. 470 like 3, let's call it, somewhere in there. I think like the max that we draw down is probably around like 465. But I think that big tech is not going to show too many teeth, if you will, on this downside potential move. I think it's going to be fairly tame. Obviously, it's probably going to move more to the downside than the SPY. But right now, we have turned over in big tech. There are some buyers that are coming into these like distribution areas right now. I'm still looking at this from the perspective of more downside, but I think it's not going to be something outrageous is kind of what I'm getting at. And one of the reasonings for that is like, okay, Dow Jones, right? Dow Jones, when did Dow Jones start turning over? This is listen, this is a pretty key metric in my opinion, right? Dow Jones started turning over Friday, October like 18th, Monday, October 21st. Right, yeah, okay. The SPY started turning over at that point too, but the SPY nearly came back to those highs while the Dow Jones continued to pull lower. That's a very big sign to tell you that there's going to be more weakness in the SPY generally. So for me, when I'm looking at these markets, right, I have a very close eye on the Dow Jones to get a better idea of number one, where we're expected to turn upside or downside, and number two, what the strength that momentum kind of looks like. So the Dow Jones has come back into the 50-day average right now, which is an area to find some kind of support. Both NASDAQ and the S&P are at key support areas, so I wouldn't be surprised to see some kind of bounce. I don't necessarily expect it to be something outrageous, but the Dow Jones, for me, I think that we might actually break the 50-day average for the first time in a very long time, but not stay too much below it, where we could probably see that 410, 412 area, and that could cause a bottom into these guys. But like I said, I am going into the week a little more bearish, right? Things can change, but I have a few levels we'll talk about on the futures where I expect to see some of that buy side. Now, we also have, what do we have here? We have we have IWM, right? The Russell here has been doing pretty crap, honestly. Generally speaking, towards the end of October, the beginning of November is usually the time to be buying IWM to hold it for an extended period of time. The majority and the best gains are made between October and June, sorry, of the following year in terms of like a holding period. But it's still very wonky. It's still kind of dead. I think it's been impacted a lot by the uncertainty and expectations of what's going on, not only with the election, but the Federal Reserve and earnings alike. Speaking of the Federal Reserve, I think that the Fed has chosen a pretty rocky path here. Yes, we have another Fed decision that comes out this week on Thursday, right? It's been pushed a day because of the election, and that's fine, obviously. I think that generally speaking, the election alone in 1 week is volatility enough, but it seems like the Federal Reserve is going to wiggle their noses into the market as well. And right now, the Federal Reserve cut 50 basis points the last time we saw, right? Resulted in decent continuation overall. Crap, I can't even remember where it was. Let me Google that quickly. What was the last Fed meeting? When did they cut the 50 bips? Yeah, September. Okay, when? September 18th. Oh my God. How could I forget? September 18th, where was it? So September 18th over here. This coincides with my main area that I'm interested in to identify that first potential long here on the S&P. If I look at that, where that is on the NASDAQ, September 18th, somewhere over here. So NASDAQ, right, the triple Q's 477. We'll take a look at what that looks like on the futures mainly, but I think that that is going to be a pretty big sticking point going forward. So like I was talking about, the Federal Reserve, right, they cut 50 basis points September 18th. Markets after that, they progressed in a pretty decent little slow band rally to the upside. Now, one of the things was that, yeah, of course, they were expecting a 50 basis point cut, but one of the big issues in that is that they went very aggressive, and that's fine, but they're pulling back right now. They're pulling back because the data points aren't as what they were expecting. So they're expecting to cut only by 25 bips, which again is a cut. But if we get anything other than that, meaning what I'm leaning on is potentially no rate cut, I think that's going to be very, very ugly for the market. Now, I think that they have made a huge mistake and they're trying to backtrack or slow it down as much as possible. So they might take a very neutral tone coming into this Fed meeting. So we'll take a look at how that shapes up. But that's another trading opportunity that's going to come up in the week that's not necessarily in the morning session. So as we continue with this, right, you guys have a lot of my general thoughts on this, but we have a few more things to take a look at. Well, maybe one more thing to take a look at. The SMH before I take a look at the futures. We can take a look at a bunch of different stocks, but realistically, I think that it's very important just to get super defensive going into this week and going into the end of the week, the next 2 weeks, I would say, and see how these things shape up. I don't have any major positions that I'm holding right now. I'm waiting for these things to blow over, then I can make a decision. But I am in the camp of waiting and seeing. Most likely there's going to be some kind of pullback that might be a bit deeper, presents an opportunity into the end of the year for some swings higher. So a lot of that hinges on the idea that tech is going to catch a very juicy bid. And yes, of course, right, I could be wrong, but it seems like the underweight in tech is finally starting to fizzle out and dissolve. So a huge, huge factor that I think people should consider. Now, one of those big things that kind of coincides with that is SMH, right? And the SMH right now, this is the semis, right? Semiconductor ETF by Vanek, and it's been struggling a lot, right? A lot. We had this like strong rally above 250, 255 that peaked into like Monday, Tuesday, or some nonsense, mid October. And we started pulling back. We started failing under the 250, which for me, that's like a big line in the sand. It's like where you move through that like balance at auction and actually get to acceptance into an area higher. And the fact that we're seeing weakness in semis, especially this ETF, has a very high, tight correlation with the S&P's health, I would say. So like if we can't see a bid and anticipated run up in semis where they're catching like strong momentum moves and we're just continuing to the upside, I don't think that's a very good sign for the spine. I don't think that's a very good sign for the triple Qs here. So I'm going to write down my expectations again, just a little quick review for the SPY and the, oops, where am I? For the SPY and the triple Qs going forward. And then we're going to compare that to the futures and get a better idea of what's going on from the futures perspective, because I think that's where a lot of my trades are going to come from. That's where a lot of my anticipated decision making is going to come from. But a huge understanding right now is that SPY is in a position where it could catch a bid right now, right? The S&P can catch a bid right now, and if it fails to do so, which I think it will, I'm most likely not going to be active until I start seeing down into these prior areas where we're trading towards that prior FOMC target area, which sits around like 640. That's the complete wrong number. 564 to start on the SPY. 564 area to start on the SPY. It's going to be somewhere within here, right? 562 to 564. So it's the same thing with the triple Qs, because the triple Qs, they're literally sitting on this like distribution auction right now. Like if they don't catch a bid right now, today, tomorrow, like into the beginning of the week, which is possible, we're going to see some more downside, which I think is a higher probability. And my higher probability play is to start to see these guys come back down into these areas where we start trading back down towards that 477 area on the triple Qs to begin with. So let's take a look at the futures perspective of things. And the way that I go about it, we'll go about the NASDAQ and the S&P 500 futures. We can take a look at some of these commodities first. So like crude oil and gold last week. Let's start off with gold last week. Gold and silver, I was looking at it and I was talking about the potential of starting to see some kind of pullback on this. Gold is a freaking monster here. It popped up. It had like 2 crap days last week, but it still kind of continued its momentum move higher. I'm still on the camp that I think gold needs to get a more significant pullback. So I am looking at this from the perspective that there could be some failure, but going into a period that there's like this heavy volatility and what's it called? And uncertainty, I think that my ass might get handed to me if I start playing around too much with this, especially an asset that's been ripping like crazy. I think that it's overstayed its welcome right now. I think like the peak probably comes in around that like 2950 area, 2900, and we start pulling down. But right now, I don't necessarily want to play with it. But I think that I'll be not that I think I will be looking at this with a potential failure coming through. Now, again, it's a very tough one to jump into, but I think that once I get a little more information, especially outside of the uncertainty, we start losing on the futures front, like 27, like 20, 27, 15 on gold. We start opening up some of that downside momentum where we can start moving into the, I guess like even maybe a bit lower, but we start moving back down into the auction over here where we can start trading 26 like 20. I think like the big buying point is most likely going to be closer to that 25.65 area, which of course is very far away. Obviously, this thing's like ramping up, but for me, that's going to be the ideal buying point here in gold. Now, I'm under the same belief here in silver. Silver is obviously not as strong. It's failing around its like yearly auction balance top right now. And I think that this one can present a little more weakness overall. I think that this one's a little more crappy, where we can look to pick it up probably even potentially down at its auction low that sits somewhere over here. But crude oil is one of the main things that I've been looking at from a swing perspective. Unfortunately, I still like I have had good swings in crude oil this year, but this thing doesn't really want to catch a bid. Now, naturally, if we do have a Trump win, I think that that is what's going to help crude oil actually expand. And I've been long crude for a pretty long time, right? Based on other anticipated reactions and I guess events. But I think that it is extremely oversold. And as long as we hold between 65 and like 60 on crude oil, on the futures here throughout the next like following months. I think that it's getting poised for that rally. I think it's extremely oversold, and yeah, some people might be like, "Well, you're a fucking idiot," but it's done very well in the past, right? I think I've had like 3 or 4 swing trades that have done me very good, right? Based on UCO. I've been buying UCO and they've yielded like decent gains throughout the year, right? The main time I bought it, right, was up like 50% over here. I bought it again over here, was up another 40%, right? I bought it over here somewhere. It's not like it went up about like 18%. It's about like flat right now. So like realistically, whatever. Talk shit all you want, but even if I lose this next trade here on oil, it's been good to me this year, and I think that it's worth like a little jab realistically to get long oil. I do like it. I think miners are up there as well. But okay, before we get carried away here, let's talk about the futures. And I'll look at like the weekly charts based on the profiles first. I guess Nasdaq is up first. I'll look at these weeklies and try to get a better understanding of what's going on realistically as we go forward. So this is a weekly chart on Nasdaq. We'll take a look at the daily and kind of break that down a little more. Now, one of the main things that I look at, like you guys know, is going to be the larger auctions that stand on this right-hand side over here. So right now, one of the key factors is like we've had this like pretty big auction balance that has been trading, right? Obviously, I split it up into two, right? You have this area over here and this area over here somewhere. We've been trading it for a very long time now. The bottom band of this auction over here, the low end is around like 19.9, like 60, we can say. I have this like little blockade around like 0.30 here, 20.030 for those that don't trade it that often. But I have that like bottom band, and I think we're overstaying our welcome of us trying to hold that bottom band. I think that it is time to go and explore some auctions to the downside. And the first thing that like comes to mind right now, honestly, is pretty aggressive, but there is a huge unfinished auction. There's a huge low volume crap garbage auction that sits over here. This was from weeks ago. This is from September, realistically, in this big tech. And I'm looking at this from the perspective that we have a balance over here that completed the auction, right? And then we have that balance that kind of coincides with the prior week balance, meaning that the start of this area over here, right? If we complete this balance, for me is a very, very strong area of support structure. Now I'm looking at this from a very wide angle, right? I'm looking at this from very far out. I understand it's a pretty big drop, but I think that that's going to denote the major, I guess, like main area of support structure for this thing, in my opinion. Like if we come back all the way down into these areas, I think realistically around like 19,500 becomes that key area swing. 19,500, that becomes that key area swing here on the Nasdaq futures, which coincides, if I'm not mistaken, where was this? This was the week of the, I don't know what it coincides with, but I'm pretty sure it coincides with that like 477 area that we were taking a look at. Now, I think that obviously before that, there are going to be some kind of opportunities. Now, we haven't traded this like 960, 930 area in quite some time. I believe the lows of the week this past week was about like 20,000, if I'm not mistaken. We have this like a distribution auction bottom over here. And I think that this, right, is going to be one of the major points that highlights an initial bounce in these markets. So around that like 19,800, 840 area. That's going to be my first region on the Nasdaq that I'm looking for a bounce. Realistically, what has to happen is we have to pretty much like just hold right now, like around like 20,000, 020, right around that area, around this area. We pretty much have to like go bid right away. Otherwise, like you start losing these areas. I think that we're going to go and explore some of these like downside moves over here. Like generally speaking, the bottom band of this like larger weekly session on the value that sits out over here is pretty important to me. So that's kind of how I'm looking at this thing. I think there is a little more downside. Let me just erase some of these things and be a little more concise with what I'm looking for. So we have this auction, right? Let's just throw that in there. We have this auction like this. We have the value that was created on this week. We have a value that was created over the last 5 days in that area, right? The top band of that area is around like 315. The bottom band of that area is about 9960, right? Based on this larger profile. We have heavy volume that comes in at about 020-ish area. If we don't go bid directly from this area, which I don't think we will, I think realistically we go and explore slightly lower prices towards like this volume drop off over here, which would bring us, I would say, maybe closer to like 19,900, right? I'm not necessarily loving that area as like a buy spot. For me, the big initial first buy is going to be somewhere over here, which is based on that 19,800, 820 area. That's what I'm looking for, which it's honestly a decent bit from now because like we closed at 170. So you'd have to get nearly 400-point drop on Nasdaq, which is respectable to find some buying into it. Now, this is the thing. I think there's a much higher probability that we fail from the top band of this auction, right? And keep this thing untouched over here because we've closed back within this balance after several weeks of closing outside of it, right? Because we had this week over here where we failed. We had this poor auction. We closed this week inside of it. We closed this week outside, this week outside, this week outside. And then finally this week, the first week in 4 weeks, that closes back within a major bounce to the downside after this larger expansion. This is a recipe for some bearish activity that's coming in, and you know my target's to the downside now. The start of this area over here, around that like 800, and then you have the bottom band of this, right, where I think is a major point. I don't even know how I'm drawing this out, but I think I said around 500, 550-ish, we can say on the NASDAQ. I think this block over here is going to be a major pivotal point where the buy side tries to come in. So again, being a little more cautious going into the beginning of the week and making sure that we're, oh, here the market just opened, that we're understanding of the increased levels of uncertainty is going to be a huge factor as we set out to the start of the week. Like you can see right now, we immediately gapped lower in both the NASDAQ and the S&P, right? We closed at 170 on Friday, and then we reopened at, I think, like 120, so 50 points lower. The S&P closed about like 58, 59. It opened about 41, right, which is a very significant gap for the S&P. Yeah, they're both kind of rallying right now. Oops. They're both kind of rallying right now, but I think that the downside pressure is pretty fierce right now. I think that I wouldn't even want to necessarily see that 315, 320 on the NASDAQ. I think that they have bigger fish to fry, lower prices for that downside momentum move. So if I take a look at like the daily, for example, on the NASDAQ chart here, like look at this. Well, these guys are selling off a decent bit here. Anyways. If I look at this on the daily chart, right, these are the past like multiple days here, right? Obviously, you can see that it's a bit tougher because like you'd have to like zoom in a bit more. But anyways, you take a look at where was it? This is the Fed day right here, right? This is the Fed day right here. So the Fed day coincides with the bottom multiple auctions where we noted that I would expect to find that kind of like buy side that like sets into this thing, right? From a deeper perspective. Otherwise, like I'll be looking at like some buying probably at higher prices realistically. So if I look at this from a day-to-day perspective, right, you have obviously some balance at the bottom of this area. I don't think that we just like blow through 19,960 very easily, but look at this from a daily perspective here. You have this immediate downside move. I can't remember what day this was. This was the 31st. So what is that, Thursday? You have some like pretty strong downside momentum move here. It leaves behind like a lot of volume. We pop some of that volume. We come into the top of the auction block and we start selling immediately, right? This makes for a strong sell side momentum push when we target, right, the bottom band of these areas. So as I'm looking at this, I don't want to see prices back into here if I'm a seller, right? I'd be more focused on, okay, we have the drop off in volume from Friday over here. So far, we're holding it pretty well, right? It stands around 130, right? That area should sell down. We should clean this stuff up. We should go down to this like into this auction low and continue that kind of downside momentum. If we're going to move, reopen, and close back within this auction to the downside, where we can get more exploration to that offer, because you start coming back down into here. If we reopen under 960 tomorrow morning, by the time everyone wakes up, right, the highest anticipated move, in my opinion, is probably going to be closer towards that like 740 area auction bottom around there somewhere. Probably find some kind of anticipated attempted support, right? But as I'm looking at this, you gotta be mindful of that sell side pressure that's coming in. I'm not saying that the whole overnight session is going to be one massive drop, but you got to be a little more careful, in my opinion, of this sell side trying to come through, especially on this Nasdaq here. That's that's coming out. So if I'm looking at this, right, like I said, I would have wanted to be like short probably from like these highs at this point. Realistically, I think there's a decent probability that we do hold out around like 140-ish, 130 on the overnight on the sell side potential and start leaking back down towards that like 960, right? I think that this bearishness is starting to take over a little more, right? Most of these rallies are probably going to get sold into if I had to estimate, but you start losing this, like I said, I don't necessarily want to be a buyer at this like 960 right away. I think it's like very close to where prices are. I do want to entertain the idea of the buy side. I said around like 800 realistically. I think like 800, maybe we can like pull it down a little more, right? 800 to about like 750. I think that becomes the area where I'd entertain a little more of that buy side on the swing. And again, right, there is a key factor that we have to understand that, yeah, it's not like fully necessarily done. We have to break that 960, but this is the area 020, 030. If we can't go just like turbo gigabit from here and just start ripping things up, which I think is going to be a little difficult, then you don't want to be a buyer anymore. This is my last chance to start this week. And I think probably volatility is going to be a bit choppier to begin the week, especially considering it's a election on Tuesday, right? Starting up right away. So these guys are trying to catch a bid right now. As I'm doing this, the market has opened and I am leading to the downside naturally, but it could be at higher prices. Now, if we take a look at the S&P, it's a very similar concept. The S&P here, we've actually moved into more clear auctions to the downside. So we've moved back into this like massive distribution over here. In my opinion, we probably break this auction low, which sits around this like 35 to 40. It was a good area last week that we were buying from Thursday going into Friday, but I think there's a higher probability we just trade 57.05. For me, that's going to be the first fishing spot to find some of these buyers. And then realistically, in my opinion, as things kind of break down, you have these like prior auction areas over here that are very low volume, right? And you have these like single prints and whatnot. I think realistically, before we clean this auction, somewhere around this area, I think is like kind of last chance. I think that's going to be like a pretty major area where like the buy side can step in around that like 56, like 20, 30 area on a larger perspective, but I'm probably going to shoot my shot around that 57.05 if I'm going to be honest with you. You take a look at this, right? I don't necessarily want to be a buyer too much at this like 35.40. I feel like I've exhausted my resources at that level. If anything, you have this auction start right here. Auction top start where I honestly don't think we trade it again. But I think that even from lower prices, the sell side around like 57.75 might come in and start pulling lower. For me, the interest spot is going to be 57.05, but like I said, I am leaning a little more to some of that sell side for the next few weeks with, right, rallies being sold into. So that's kind of how I'm starting my week here. Especially with the futures. I think that if I'm looking at this again, right, I don't like I think just like lower highs persist. I don't necessarily think that we clean this auction. Generally, when we have like weeks like these, it's very hard for the next week to completely clean the auction and then sell, because like realistically, best case scenario is that we find the sell side from the bottom of this prior auction where we have this like low volume over here. I think honestly, like the max we see is probably the top band of this like bounce over here, where the auction is most likely going to fail to get cleaned, and then we start seeing that sell side. But for me, I'm probably just gonna wait until these like downside auctions over here through the balances get disrupted. It's the same thing for the Nasdaq. You take a look at this Nasdaq over here again. Uh, Take a look at this Nasdaq over here again, and you have like this top band. Like I said, I don't necessarily think that we see it, but I don't think that we clean this auction before we start moving prices to the downside. And for me, like I'd be expecting more of a break through the auction lows to get more confidence in that move. So that's my overall breakdown, right? It might be very, very long, but that's how I'm going about this week. I've set out clear goals and areas that I like to trade, mainly on the buy side and the sell side here for the Nasdaq and the S&P. So I'm going to go with that. Naturally, a lot depends on how we open up tomorrow, but I think on the overnight session, sellers are probably going to come out at like around 140, 150 on the Nasdaq. On the S&P, probably closer to like 75 or so. It's not even a 75. Closer probably to 75, 70 area. I think that the sellers come out through there on the S&P and try to actually break both Nasdaq and the S&P. Nasdaq under that 0.20 and the S&P under that, I guess, like 40. Well, like, so for now, they're trying to hold those areas. They're trying to hold support structure into those areas. But I think ultimately this gap down is kind of alluding to a little more weakness that comes through. And then if that doesn't work out, I'm going to sell the tops of the auctions as they are on the S&P and the Nasdaq, closer to about 320 on the Nasdaq and about like, I think it's like 58.05 on the S&P. I think those two areas do hold. So let's go from there. Let's see how this week shapes up. We'll be trading the election in Discord on Tuesday in the evening session, and we'll be trading the FOMC as well in the afternoon on Thursday, and we'll go from there. So let me just